Right now, the world is watching a dangerous escalation. The United States has entered the conflict between Israel and Iran. Missiles are flying, airstrikes are happening, tensions are rising across the Middle East. But while most people see tragedy, destruction, and fear, there's another side of the story. Because every time a war begins, someone makes billions, and it's usually not the people fighting it. The hidden financial side of war. When conflicts escalate, something very predictable happens in the markets. Defense company stocks go up. Companies like Lockheed Martin, RTX Corporation, and Northrop Grumman often see their share prices surge. Why? Because war means demand for weapons skyrockets. Missiles, drones, defense systems, radar technology, all of it costs billions, and most of it is purchased from private companies. The military money machine. Here's something most people don't realize. The U.S. government spends hundreds of billions of dollars every year on defense. In fact, the United States spends more on the military than the next several countries combined, and a huge portion of that money goes straight to private defense contractors. That means taxpayers fund it, but corporations receive the profits. Think about that for a second. When tensions rise in places like the Middle East, governments rush to increase military spending, which means more contracts, which means more revenue for defense companies, which means higher stock prices. War in the stock market. This pattern has happened many times before. When Russia invaded Ukraine in 2022, defense stocks jumped. When conflicts escalated in the Middle East, they jumped again. And now, with the current tensions between Israel, Iran, and the involvement of the United States, the same thing is happening again. Investors expect governments to spend more on missiles, air defense systems, surveillance technology, military logistics, and the companies that produce those systems see their revenues explode. But who actually pays? This is where the financial story gets interesting. Because war isn't free. The money has to come from somewhere. And in most countries, that means taxpayers. Public money funds the military budget. That money flows to defense contracts, and those contracts generate profits for shareholders and corporations. Meanwhile, ordinary people are often dealing with the opposite: higher inflation, higher taxes, higher government debt. The incentive problem. In a normal business, companies succeed by making customers happy. Restaurants make better food. Tech companies build better apps. But in the defense industry, the incentives are different. The demand for weapons increases when the world becomes less stable. More conflict, more fear, more military spending, more contracts. And that creates a system where geopolitical tensions often translate directly into financial opportunity. The bigger financial lesson. Now, this doesn't mean wars happen just because companies want profits. Geopolitics is complicated, but understanding the incentives behind money changes how you see the world. Because when you follow the money, you start noticing patterns. Wars create destruction, but they also create huge financial flows. Billions move from governments to defense companies to investors. Final thought. Most people see war only through politics or headlines, but there's also a financial system operating behind the scenes. A system where rising tensions often mean rising profits for a small group of companies. And understanding that system doesn't just explain global conflicts. It teaches a powerful rule about money. Always follow the incentives. Because when you understand who benefits financially, you start seeing the world very differently.